Welcome back, students who are taking financial accounting, and in this series of videos we are working on the Chapter 1 exercises, the Group B exercises, and we stopped on 1-26 in the previous video, so we're going to pick up here with 1-27. And as always, watch the video, pause, rewind, watch it again if you have to. And if you still don't understand the concepts, then feel free to contact an instructor either by email or telephone. Okay. So 1-27. It says Samantha. Let me get my pen. Samantha Ludden opened a medical practice titled Samantha Ludden MD Inc. During March, the first month of operations, the business experienced the following. So these are transactions that occur during the month. And the requirement says analyze the effects of these events on the accounting equation of the medical practice. Use headings for cash, medical supplies, land, accounts payable, common stock, service revenue, and rent expense. So let's see here. Let me go to a blank screen here. And it says cash, medical supplies, land. Then we had accounts payable, and then we had common stock, and we had service revenue, and we had rent expense. Okay, so remember, this had said the effects on the accounting equation, and the accounting equation is assets is equal to liabilities plus equity. But remember, with the equity, we break that down into common stock and plus retained earnings. Okay. And then we also have our income statement accounts, which are revenue less expenses. All right. And remember, they get closed out to our retained earnings. Okay. So here we have cash, medical supplies, and land are asset accounts, right? And that's equal to accounts payable, which is a liability account, plus, and then we have common stock. Here is our equity account. And over here we have our revenues less our expenses. So remember that the revenues less expenses are the retained earnings. Okay. All right, so jump back up, and it says she bought 45,000 of common stock in the business by opening a bank account in the name. All right. So if she buys 45,000 in common stock, let me see if I can't draw a straight line across this here. Not so easy with the digital pen. Okay. All right, good. All right, so let's see here. So she buys $45,000 of common stock. Now, I'm going to work out these as transactions so that you get accustomed to seeing how the journal entries are made and the thought process is created. Right now, they're pretty much just saying, okay, look at the, can you categorize the accounts? Remember, categorization is assets, liabilities, equity, revenues, and expenses. And of course, under each category, we have general ledger accounts. But the way the solution is presented is not the way it works out in the workplace. Okay, I mean, you have to make journal entries in the workplace. So I'm going to work through the journal entries and the thought process, and then of course build in order to solve for what's being asked, and that you see in the solution. So she's investing $45,000 in the business, and she's buying common stock, and of course creating a bank account. Right. So the first question I ask myself is, am I affecting cash? Okay. And my answer to that is yes. Okay. So is my cash increasing or is it decreasing? Right. Well, if it's increasing, right, because remember she's giving $45,000 to the business, so the cash is going from 0 and it's increasing to 45,000, right? So that's an increase. And from previous videos and the introductory videos, we know that we increase assets on the debit side. That's the normal balance. And we increase liabilities. So that's we increase liabilities on the credit side, equity on the credit side, revenues on the credit side, and expenses on the debit side. Right? Now remember, right here is the accounting equation. This here is the income statement. And visually, so that you can always keep it in mind, the way you remember what the normal balance is. And the normal balance is what increases that category of accounts: assets, liabilities, equity, revenue, and expenses. Is the normal balance is what increases that category of account. Well, the what is either a debit or a credit. And we think in terms of, okay, well, on the left-hand side of the equal sign, it's a debit because that's the definition of a debit, what's on the left. And on the right-hand side of the equal sign, it's a credit because why? The definition of a credit is, what's on the right. Okay. Debits and credits don't mean plus and minus, right? Why? Because if, an asset is increased on the debit side, but yet a liability is decreased on the debit side. So you can't say debits are pluses and minuses, or credits are pluses and minuses. It's a relationship, all right? And that's how you have to think in terms of the relationship. Right? So if I'm increasing my cash, all right, 45,000, that means I'm going to debit it because it's an asset, and I'm increasing my assets on the debit side. So I debit cash for 45,000. And now to finish off making the journal entry, I know that my debits must equal my credits. So the question becomes, what do I credit? Now, a lot of students want to work with the last half first. In other words, when they're reading these here transactions, like in this case here, about $45,000 of common stock, and they'll start out with common stock and try to figure it out. Okay. And eventually they end up in trouble. They make mistakes because they're starting with the last half of it. Well, they're starting with the more difficult part of the entry. Okay, if I start out with cash and I figure out cash, then I can back into the other half of my entry, right? And to back into the other half of the entry, all I'm asking myself is, well, is this something that I'm going to own? Is it something I'm going to owe? Is it an investment in the business? Is it, a sale, or is it an expense in the operation of the business? Well, in this case here, it's telling you it's common stock. Okay, so all I have to do is just credit common stock for 45,000. And I backed into it without having to think about whether my common stock is a debit or a credit, or if it's increasing, decreasing, or whatever have you, because I had figured that out when I had worked with and dealing with cash first. Okay, so to work on this is what the journal entry is going to be if you make a journal entry. And remember that when we make a journal entry and we post to the general ledger accounts, all we're doing is rearranging the information. So let's rearrange the information here. We're going to group like information together under the general ledger accounts. So we have a debit to cash of 45,000, and we have a credit to common stock for 45,000. Now notice that we are dealing with positive numbers. Okay, we're not dealing with negative numbers. We try to deal with positive numbers as much as we possibly can. And notice that because I'm debiting cash, right, and that's an increase, I have a positive 45,000. And because I'm crediting common stock, because my common stock went from 0 and increased up to 45,000, but because I'm crediting it, that's an increase. So my number is a positive 45,000. A lot of students get tripped up thinking, well, if I have positive 45,000 over here, I have the negative 45,000 over here. If I have a positive 45,000 and I have a negative 45,000, that is not equal. All right, that is not equal. That's a $90,000 swing between those two numbers. Okay, so debits equaling credits, I need positive numbers, right? If I have a positive for a debit and a positive for a credit, now they're equal, all right? And there's, the difference between those two, if I subtract, the positive 45 from the positive 45, my net effect is 0, all right? So don't get hung up on a negative number in there, all right? We try to work with our positive numbers as much as possible, okay? All right, so March 6th. No, I'm not putting in the dates, okay? Now that's up to you to put in the dates. I just don't have space. Right, it says business paid $20,000 cash for land with the intention of building an office building on the land. Right, so I'm asking myself, am I affecting cash? And the answer is yes. Okay, is my cash increasing or is it decreasing? Well, in this case, it's decreasing. Why? Because I'm paying $20,000 in cash. Well, cash is an asset. And if I increase my assets on the debit side, that means I decrease my assets on the credit side. So if I have the debits and credits, and if I'm paying out cash, that means I'm going to credit my cash for $20,000. Okay. Now, if I'm crediting cash, that means I have to debit something else. Well, what am I doing? I'm purchasing land, right? Purchasing land. And if I'm purchasing land, isn't that something I own? Okay. So land is an asset, right? And since my land goes from 0 to 20,000, okay, that means I'm going to debit it because land is an asset, and I increase my assets on the debit side. So I have a debit to land for 20,000. Right? Now notice what I'm doing here. All I'm doing is just exchanging one asset for another. Okay, so here, since I'm crediting cash, I'm going to subtract 20,000 because it's a credit. All right. Now remember, I had said, oh, you try to work with positive numbers as much as you possibly can, and that's true. But in this case here, I'm decreasing my cash, so I have to subtract it. And for my land, I'm increasing it by 20,000. So I'm taking it out of cash and I'm moving it over to land, right? I'm just changing from one asset to the other, right? And so therefore I have to have a negative sign in there, okay? But that's what my journal entry looks like. Now don't go memorizing the journal entries. Try to work through them, through the thought processes, okay? All right, 11. It says here the business purchased medical supplies for $1,000 on account. Okay. So the first question I ask myself is, am I affecting cash? And in this case here, the answer is no. And since my answer is no, I ask myself a second question. Am I affecting accounts receivable or accounts payable? Okay. If it's an accounts receivable, I treat it the same way as cash. If it's an accounts payable, then I treat it the opposite of accounts receivable. Because why? They're two sides of the same coin. They're both on account. The only difference being is receivable is when somebody owes you, you're extending them credit, and accounts payable is when you owe somebody else. They extended you credit, Okay, so in this case here, we're purchasing medical supplies for $1,000 on account. Well, the words on account immediately tells you it's going to be either an accounts payable or an accounts receivable because you're extending credit. But I still want to go through the process of asking, am I affecting cash? No. If I don't affect cash, then I ask, am I affecting accounts receivable or accounts payable? And in this case here, it's yes, right? Because why? I'm buying something on account, right? So the question is it a receivable or is it a payable? Well, if I'm buying it on account, that means I owe somebody, right? So um, my account, that would be an accounts payable. My accounts payable goes from 0 up to 1,000, right? So that's an increase of 1,000. And we know that we increase, since accounts payable is a liability and we increase our liabilities on the credit side, I'm going to credit accounts payable for 1,000, and that means I have to debit something else, right? Debits must equal credits. If I credit accounts payable for 1,000, I have to debit something else. So what am I debiting? Well, what am I buying? It's telling me I'm buying medical supplies, okay? Well, if I buy medical supplies, don't I own them, right? And in that case here, that means it's an asset, right? And I have a general ledger account for medical supplies, so I end up debiting medical supplies for 1,000, and that's my journal entry. Okay, so let's fill this in. Under medical supplies, I'm debiting 1,000. Under accounts payable, I'm crediting 1,000. All right. Now, the thought just occurred to me before we go any further that notice that when I paid the $45,000 purchase of common stock, my accounting equation was in balance. I had assets of 45, which was equal to 0 in liabilities plus 45,000 in common stock. My accounting equation stayed in balance. And even when I bought the land, my accounting equation stayed in balance because 45 less 20 is 25, all right? Plus 20 is 45. I'm back. Remember here, all I'm doing is just exchanging one asset for the other, and that was still equal to 0 plus 45,000. So my accounting equation stayed in balance, and it's still in balance, right? Why? Because now I'm at 46,000, right? The total of all of it, my cash, medical supplies, and land right now is 46,000. Go ahead and add them up if you have to, and that's equal to, 1,000 plus 45,000, okay? So my accounting equation still is in balance. All right, so let's go to the next entry. The 15th, the business officially opened for business, okay? Well, just because it opens doesn't mean that there was a transaction that occurred, so there is no entry for this, okay? Because nothing happened. Just what you swung the doors open, turned on the lights, right? So there's no transaction for the 15th. Now on the 17th, the business treated patients and earned service revenue of 11,000 receiving cash. Okay. So first question is, did I affect cash? And the answer to that was yes. Why? Because my cash increased from 0 and increased $20,000 more. Okay. So by now we know cash is an asset. I debit my assets when it increases. So debit the cash of 20,000. Right? That means I have to credit something else. Well, what was the essence of this transaction, right? It says earned service revenue of 11,000. Did I see 20 on that? Yeah, 20, sorry about that. 11,000. So it's telling you it's earning service revenue, okay? So it's giving you the account, right? What we're making a sale. I mean, we performed a service, or if we sold a product, we're making a sale. We're it's the operation of the business. Whatever business you're in, whatever you're doing to either provide the service or provide a product, that's earning your revenue, right? So they're telling you it's service revenue, so I credit my service revenue for $11,000, right? That's my journal entry. So let's fill it in the accounting equation. Okay, so I debit my cash increases, so I get 11,000, and my service revenue increases, so that's 11,000. All right, I'm crediting service revenue. Now, I want you to notice here, let me use green. Remember, this here is my accounting equation. This is my income statement, right? So if we take a look at our accounting equation right now, right, I have assets, which was 46 plus 11 is 57,000 in assets, is equal to 1,000 in accounts payable and liabilities, plus 45,000 in equity, the common stock. Well, 1 in 45,000 is 46,000. Okay, our accounting equation is out of balance. Why? Because as soon as we hit an account on our income statement, whether it's a revenue or an expense account, it throws our accounting equation out of balance. So at the end of the accounting period, we're going to have to make closing entries in order to bring our accounting equation back into balance. All right. All right, let's see here. All right, number 19, the business paid office rent in 1,700. Right. So, did I affect cash? Yes. Did it increase or decrease? It decreased. Right. If it decreases, is that a debit or a credit? Right. If it decreases, it's a credit. Right. So I have I have a credit to cash for 1,700, and that means since my debits have to equal my credits, I have to look to see where I find my other debit from, all right? And it's telling me it's rent expense, right? So I'm paying out rent, which is the normal operation of the business, so that has to be a debit. Notice when you back into the journal entry, you don't have to be thinking about the other half of whether it's a debit or credit. It automatically is a debit or a credit because you're backing into it. If you can, most of your transactions are going to affect cash or accounts receivable and accounts payable, right? That's 75-80% of your transactions. And if you know how to do those three simple accounts, you're going to back into the other half of the transaction most of the time. Don't try to be figuring out the rent expense and common stock and these medical supplies. Don't be trying to figure those out. Deal with the cash first, and or then accounts receivable and accounts payable. All right, makes life so much easier. So I'm going to credit cash, which means I'm going to have to subtract 1,700 from my cash. And over here in rent expense, since that's increasing, it was 0 before, now it increased to $1,700. All right, so I have a debit to rent expense for 1,700. All right, let's see here. 22 is the business sold supplies to another doctor for $350 in cash, the cost of those supplies. Right? So if the doctor's selling the supplies, 350 of them, $50 worth, does this affect cash? Yes, because why? Receiving cash for it. So am I debiting or crediting cash? Well, I'm debiting cash because cash is an asset, and I increase my assets on the debit side for $350. That means I have to credit something else, right, for $350. Well, what is it? Well, what did I sell? I sold some of my medical supplies, so that means I have to credit med supplies for $350, and that's my journal entry. Right? Simple. I didn't go wrong by trying to figure out medical supplies first and then backing into cash, right? So I have a debit to cash, so I'm increasing my cash by 350, and my medical supplies I'm decreasing by 350, right? I'm moving one asset, to another, all right? So let's get rid of that and go on to the next one. And then it says the business paid $700 on account related to the March 11 purchase. The March 11 purchase was the on account, right? The accounts payable. So I'm paying $700 of it, right? So the question becomes, first question that I ask about the transaction is, am I affecting cash? And the answer is yes, okay? Is it increasing or decreasing? Well, if I'm paying off my accounts payable, that means I'm decreasing, right? And if if cash is an asset and I increase assets on the debit side, that means I must be crediting cash because I'm decreasing my cash by $700. Now, if I'm paying off what I owe, and what I owe is the accounts payable of 1,000, right? Then that means I have to be debiting my accounts payable for 700, right? It's I'm paying off what I owe. What I owe is a liability, right? Now, so that means I debit accounts payable by 700, and there's my journal entry. Now, always, the point here to bring up is always ask the question about cash first, okay? Even though it's very simple and easy to be tempted by question number 2, accounts receivable or accounts payable second, okay? Go in the order, all right, that it's, the process. Do I affect cash first? Then back into the accounts payable or accounts receivable, okay? And the reason why I'm mentioning that now is because if you until you become seasoned and real experienced with this, if you jump ahead because you saw on account as part of the transaction here, okay, on account, and you thought to yourself, oh, that's an accounts payable or accounts receivable, so let me do the accounts payable first, all right, you might get it wrong. Right? You might make the accounts payable a credit for 700, and that would be wrong. But if you follow the process of asking about cash first and then backing into the accounts payable or accounts receivable, even though that's the second part of the question that you would be asking is part of the process, do the cash first, and you won't go wrong with the receivables or payable. If you start with the payable or the receivables or payable first, you may get it wrong. Okay. Especially when transactions get really complicated. So I have a credit to cash for 700, and I have a debit to accounts payable for 700. Now notice that it's a debit, right? Remember, on our liabilities, right, the normal balance is a credit. That's what increases the liability. So we're looking at this account as with the normal balance being a credit. Well, if I'm reducing it, that means I have to be, I'm debiting it, right? And if I'm reducing it, that means I have a negative here. So I have a negative number over here for cash and a negative number over here for accounts payable. But that falls in line with what the normal balances are, okay? All right, now, let's see, the last thing here, since we've taken care of all of the transactions, where you have to analyze the effect on it. All right, let me get my pen. And that means we are going to, come on, need pen. There we go. Okay, so as we had the transactions, you saw me go along and create the journal entries. And as I created the journal entries, I had said what I was doing was I was posting them, I was mentally posting the information to the general ledger accounts, which is what we're looking at right here on the screen, okay? And so then at any point in time, you can ask yourself, what are the balances in those accounts by creating a trial balance. And that's in essence what this here problem is asking you to do. Okay, it's now saying, okay, well, what are my balances in the accounts? So if I add up this 45,000, take out 20,000, add 11,000, subtract 1,700, add 350, and then subtract 700, I end up with $33,950. Okay, and I'm going to add my supplies, which 1,000 less 350 is 650, plus my land of 20,000. Now remember, they're all my assets, and that's going to equal my accounts payable of 300, 1,000 less 700, plus my common stock of 45,000, okay, plus my revenues of 11,000, less my rent expense of 1,700. And if you add those all together, all right, they should all equal the same amounts. Let's see here. 33,950 plus 650 plus 20,000 is equal to 54,600. Okay, and if I take 300 plus 45,000 plus 11,000 minus 1,700, I end up with the same thing, 54,600. Okay, so my debits equal my credits. Now, like I said, there's more than one way to present information. Okay, it's all the same concepts, but the information is presented differently. Basically, what I have here is down in the bottom is now my trial balance. Okay, but that's not how it's normally presented. I'm just trying to make you aware that as we go forward, you're going to see things change and you're going to see me do things differently. And the author does eventually change from this format because this is only in chapter 1. But I'm trying to keep you prepared for what to expect going forward, because remember, accounting is not like American history where you learn one thing, learn the next, learn the next, learn the next. In accounting, everything affects everything else. So you have to look at the totality, the whole of everything when you're doing this work. Okay. So oh, and just one last little quick thing here. Let me use black here. Remember that right here, okay, this is the income statement, right? And this here is all the balance sheet. Okay. So if you were looking at this from that perspective on the balance sheet, really you would have $45,300, and your accounting equation would not be in balance because it's 54,600 is not equal 45,300. But like I had said, at the end of the accounting period, you end up making closing entries to close your revenues and expenses and put this remaining amount, right, back into your retained earnings. Okay, and then that brings your accounting equation back into balance. All right, hopefully you got all of that. Watch the video again if you have to, and if you still have any questions, feel free to contact an instructor, and I'll see you in the next video for 28.